gains. You're not generating any kind of ordinary trader business income, right? So you're not selling services or products to third parties. Now, the reason why that's significant is because when you incur, this is more or less what you would see a trading portfolio look like, obviously, if they're profitable. The numbers here can get even much larger, right? Obviously, if you're trading a large portfolio 5 days a week, if you're making trades, so buying and selling at least 4 of the 5 days, that's normally a good sign. If it's less than that, then you start to kind of teeter on the edge of, okay, well, are you really a trader, or are you more the buy and hold long-term type of investor, right? Remember, day trading is just that. We're thinking of day traders. They're constantly flipping over their portfolio, right? So they're trading every day. They're making multiple trades a day. That's what a day.
Okay, and let's discuss what benefits you get. First of all, we go here on RS website. All information is here. You can get it. Traders in securities and how you can apply. When you file tax return, you have to apply. Have you done to do it retroactively for previous years? Let's see. The mark-to-market election. Traders can choose to use the mark-to-market method of accounting. Investor cannot. If you're a trader, don't make a valid market-to-market election until under section 475F, then you must treat the gains and losses from sales of securities as capital gains and losses and report the sales on Schedule D. Let's see. 1041 Schedule D, Form 1040, capital gains. Because, for example, if you're not a trader, long-term investor, of course, Schedule D is much more better. Because if you trade market-to-market election, it will be treated. It will be treated as ordinary income, and taxation for ordinary income much more higher. That's why it's only for daily traders who trade daily, and for example, they want to write off all losses and there is no wash sale. It's good only for long-term or short-term investors. Yes, I put all links in comments, and again I will show you differences. Let's discuss what differences between long-term and short-term investors. Let's see, exception for retroactive relief. Why regular retroactive election is not allowed? There is a narrow and difficult path to request relief from RS under Treasury regulations. You see, the success such as request depends on meeting two stringent conditions: reasonable and good faith action. You must prove to IRS that you act reasonably and in good faith when you initially failed to make an election. The use of hindsight, for instance, seeking to make the election retroactive because you have large trading loss, is the key factors. No prejudice to the government. You must demonstrate that granting relief would not harm the interests of the government. Of course, that's why you can try, yes, whereas consider its interest reduce it if allowing the election results in lower tax liability than if the election had been made on time. Because this way you can write off all your losses. Okay, subscribe, give like to this video, and put in comments, have you tried it and did you get it done retroactively? See you.